Hello everyone and welcome into Future Money Trends. We got a real opportunity today. It's in the resource sector, and as you know, the resource sector has been on fire. The best companies are moving and they're moving quick, and we're just at the tip. We're just seeing the tip of the iceberg of what this bull market has to offer. And really what I have for you today is a mining stock. This is exactly what a 10-bagger mining stock looks like, and it's just beginning to move. Now this company is in the SOP Potash world. It's an agriculture company. They produce fertilizer, and this commodity has actually been outperforming gold and silver throughout this entire bear market. And it's only second in terms of its performance to lithium. SOP Potash has gone from $430 a ton in 2008 and is now trading at $890 a ton in 2016. The demand for SOP Potash is 10 to 12 million tons per year, and the supply is under 5 million tons. This leaves us with a global deficit of 6 million plus tons per year. The SOP macroeconomics, there's a lot of upside in this commodity. And the company we're going to be talking about today is Potash Ridge Corporation, traded under ticker symbol PRK on the TSX, and on the US side, POTRF. And this company has an amazing value proposition. They got 680,000 tons of SOP production potential worth hundreds of millions of dollars. And the company is currently only valued at less than $35 million. And the company is staged for production to begin in as early as 2017. So they're on their way. They got a lot of exciting things happening. And I'm going to be talking today with Ross Phillips, who's the Chief Financial Officer and the Chief Operating Officer of Potash Ridge Corporation. Ross, thanks so much for taking the time to come on the show with me today.
Thank you very much for having me, Kenneth.
Absolutely. Well, I'm looking forward to talking about this because we do cover a lot of mining companies here at Future Money Trends. We specifically focus on precious metals, but we're talking about a different sector here, and it's potash, and it's directly tied for its primary use as fertilizer, and this correlates directly to human survival and basic needs. So I want you to lay the groundwork here for what is potash in general, and what have we seen happen to it during this severe bear market?
So potash in general is potassium. It's an essential element for plants to grow. So if your family is into gardening, like my wife allows me the opportunity to, and you go looking for fertilizer, there's 3 numbers on a fertilizer bag, and that's NPK, and the third one is K, that's the potassium. And it's essential to everything that grows. And so there's 2 kinds of potash. There is the regular kind of potash, which is world-known, called MOP, and it's great for row crops. It's great for wheat, barley, corn, and those kinds of crops. The other kind is SOP, and it's called sulfate of potash, and it's better suited for high-end crops. It's great for fruits, vegetables, and nuts, particularly almonds in California, where it's the most popular. And these 2 kinds of potash have shown different paths over the last 5 or 6 years. MOP, regular potash, has gone from about $500 US a ton to about $250 a ton right now, as the larger producers of it, which about 50 million tons a year, is produced out of Saskatchewan in Canada, Russia, and Belarus, and there's been a glut on the market. It's really been affected. Sulfate of potash, on the other hand, has seen a completely different approach than most commodities. It's gone from about $500, $550 US a ton to $890 a ton over the last 5 years, and that's just because there's a shortage of it. The market in the world is only about 5 million tons a year, and that's because of supply limitations, not because of demand limitations. In the United States, there's only one producer of sulfate of potash. They produce about 300,000 tons a year. It's out of Utah, and they sell it almost exclusively to the almond crops in California. So it's a supply-constrained commodity that's in high demand, or high-end crops.
So when it comes to MOP versus SOP, why did we see MOP collapse so much compared to SOP? Is it just simply the supply-demand issue, or did it have anything to do with what has happened across the board with essentially all commodities?
With MOP, the major producers used to manage supply, just like OPEC used to manage the supply of oil. And they would only produce as much as would support a given price. And although it wasn't formally cartels, it was the Canadian producers would limit supply, and the Russians and the Belarusians would limit supply to support price, principally selling it to China, but worldwide as well. Well, 4 or 5 years ago, the Russians and the Belarusians got into a dispute about this strategy, and the Belarusians broke from the rest and just started producing more to get more revenue. And that led to similar behavior by the other producers. So they ended up with more supply coming into the market at a time when economic growth was slowing down and supply was coming off. So you ended up in a situation of oversupply into the market and a lot of excess capacity in the market. So that's why MOP came down. On the other hand, SOP, there was not any incremental production coming on. There wasn't the ability of traditional producers to produce more. At the same time, the crops that SOP provides nutrients to, largely the almonds and citrus crops in California, their prices were going up considerably, especially almonds, which led to increased demand for SOP. So you ended up with this greater ability of the consumers of SOP to pay for the product as they were seeing a greater benefit to their crops.
So what's your prognosis going forward on SOP in the global markets?
Right now, the demand is about 5 million tons a year. According to the CRU, which is a major consultant out of the UK, there's room for another 4 million tons a year of SOP production in the world without really impacting the price. And we see about room for about 500,000 tons a year in North America. So there is a lot of room. The challenge is there's 3 ways to produce SOP. One is through Salt Lake, like the Great Salt Lake in Utah. And there's just not that many more of those around. There's one in China called Lapupo, 1 million tons a year. Compass Minerals out of Utah, they do 300,000 a year, but there's not many, if any, of any size in the world. So it relies on other methods of production. One, in our Blonde Mountain, you could take another ore that has this high-grade potash in it and produce with it. Or you could do what we're doing in Valleyfield, take regular potash and convert it into this higher form of potash called SOP. But those incremental demand steps, there's not a lot out there, and we're a unique opportunity to serve that niche.
Ross, let's talk about Potash Ridge. Your company, you alluded to it, bringing up some of the projects. Give us the history on this company, and what are we looking at with Potash Ridge today in 2016?
So our company was formed in 2011 to develop the Blonde Mountain project in Utah. It's about halfway between Salt Lake City and Las Vegas. It's in a fairly remote corner of Utah. And it has this really neat ore called alunite that has SOP in it as well as sulfur and alumina. We picked up the project in 2011. It had originally been developed in the 70s and stalled because they were looking at the alumina. We looked at it with the SOP story, which was very compelling, and said, we should look at this as an SOP project. So we picked it up. We raised $20 million, moved the project forward, took our company public, raised another $20 million, and in about a 2-year time frame, we took Blonde Mountain from a bunch of banker boxes through the development phase to we had a pre-feasibility done. So it had really compelling economics. It, 640,000 tons a year of SOP production, a 20% return, and 40 years of reserves. So a really solid project, as well as we permitted the project. It's on state land. It's just in a wonderful place to do business. Our challenge became, at that time, in the commodity cycle, there wasn't a lot of interest in financing very large billion-dollar mining projects. So we continued to look at Blonde, we continued to support it, and look for ways to maybe do it on a different scale. But in the meantime, we came across the Valleyfield Fertilizer Company, which was founded by a gentleman named Jay Hussey. And it was a way of taking MOP and converting it to SOP, so converting it to this higher quality potash, and doing it in Quebec, just outside of Montreal. This Mannheim process that he's using is known throughout the world. It's used exclusively in China and Europe in making SOP, but it's not used in North America because one of the byproducts of it was hydrochloric acid. So you needed to have a very special location that you could sell the hydrochloric acid and the SOP into. Mr. Hussey found such a location in Quebec, and he was looking at developing it, and we thought that was a great opportunity for us to bring together a smaller capex, near-term opportunity in Valleyfield producing this high-end fertilizer, as well as continuing to look at options to scale Blonde Mountain, which would be a larger, lower-cost producer. And it really the opportunity to have two projects developed in parallel to serve this niche market.
Ross, I'd like you to reiterate what you said there regarding Valleyfield. You are talking about converting regular potash to this premium potash, SOP, so the MOP to the SOP, and the dynamics of that is really interesting considering the price of what MOP is at now and what SOP is. So if you could kind of just reiterate that again, that's pretty significant what you guys are doing there.
It is, but I think part of the background there is where Mr. Hussey's background. He worked for 9 years for a company called Magao in China, which uses this process to produce 300,000 tons a year of SOP. And what you do is you take regular potash, which is potassium chloride, mix it with sulfuric acid in a large furnace, and a chemical reaction occurs, and out the other end comes SOP and hydrochloric acid. One of the challenges is you need to produce these plants near where there's a demand for the hydrochloric acid. And it's a very specialized challenge to find the right location for these plants. Mr. Hussey, having worked for 9 years with Magao and scouted the world for locations, found a great location in Valleyfield that's close to the St. Lawrence River, close to infrastructure, as well as having this localized demand. So he used his knowledge to find this location. Within North America, there's not a lot of locations like this, and Mr. Hussey's knowledge really allowed us to find the right location for this plant and the right dynamics to make it work, and work very well.
And as far as the main takeaways for the company, what should people be looking at when it comes to Potash Ridge?
Well, first and foremost, we're looking at getting Valleyfield into production as soon as possible. We recently completed a study with SNC-Lavalin to estimate the capital cost of producing, which would be $50 million Canadian, and how quickly we could get it into production, which would be by the end of next year. Now, based on their study, their operating costs, and our view of the market pricing, we believe that we can make the estimated returns are over 30% after tax for Valleyfield, and we can generate $13 million a year in cash once we start producing. So it's a very attractive opportunity in the near term. We're looking at some tangible milestones in the near term to get us to developing it. In parallel with that, we're going to continue to look at options to do Blonde Mountain on a more modest scale, which would better meet market demands and better meet the expectations of the financial community in developing this farmer project, and hopefully bring it into production maybe a year or two after Valleyfield, so we can have these two projects up and running in the not too distant future.
Ross, when it comes to the economy, a lot of people are concerned about owning certain stocks because of economic risks. And I wanted to ask you, what are your thoughts regarding this sector with, how the economy is? We got a lot of global debt, a lot of problems around the world, endless money printing. I mean, how do you guys position yourself and feel about the way the economy is when you guys are operating business? And, what do you tell investors?
Well, first and foremost, people have to eat. And if they have to eat, they're going to need food. Our population is growing worldwide, and we're not making any more land, so we have to make better use of the land we have. And to do that, we need to manage it and steward the land appropriately, and part of that is applying the right kind of fertilizer to the land. SOP helps the soil. MOP has chloride. It hurts the soil, so we actually have a benefit. Second, if you take a look at the global dynamics, the middle class is growing in the third world, and with it, their dietary habits are increasing. So they're looking for more fruits, more vegetables, more nuts, more high-end crops that need SOP to be produced. So even if we have some economic challenges worldwide, the growing population and the economic development leading to better dietary choices will actually drive the demand for SOP going forward.
When it comes to any price predictions, I always like to ask my guests this. Do you have any price predictions for SOP going forward?
We believe that given the supply and demand dynamics, the pricing should remain solid going forward. I mean, we can't make predictions on our own, but we can say that there's very strong demand for it. It's in a supply deficit. There's limited new supply coming on. So you end up with a nice market dynamic that I think that we can rely on for the foreseeable future.
And if people want to be able to partner with Potash Ridge, Ross, reach out to you, learn more about the company, where would they go, and how would they go about doing this?
I think they can go to our website, www.potashridge.com, and they can start there. The contact information for the company is there as well. In addition, we're listed on the Toronto Stock Exchange under the symbol PRK.
All right, everyone. Well, this is Future Money Trends, and this is Ross Phillips, who joined us today of Potash Ridge Corporation. Ross, thank you so much for coming on and chatting with me today.
Thank you very much, Kenneth.